Hey everybody, good morning, good morning, good morning. Man, I didn't even put a monster on the. Jeez. I'm scattered, smothered, and covered here, I guess you might say. Anyway, good morning, everybody. Get my morning monster going. Donald, John, Anthony, Francois, Dan, Thomas, Rob, Nikki. Good morning, everybody. Wade, Indy, Kenneth, Rosalind, Sergio, Craig, Dead, Larry, Rongamer, Gary, Mary, Gary, Mary, Bill, Al, Terrence, Chris, good to see all my friends as usual. And well, so the story of the night, or what I found while I was doing my research last night. This Goldman Sachs trading desk has lined up $5.5 billion of the B of buybacks every single day for the rest of the month. That is pretty crazy. And yesterday we were showing off the chart with the buyback, the S&P 500 companies coming out of the buybacks. We're like 90% roughly as of this week, and getting more every day pretty much. So here's what we got. I will pull this over, and here we are. This is the earnings for this week right here. And as we were looking at yesterday, right there is the companies coming out of the buybacks. We're right in here. We're at 90, basically 90%. Got about 50 companies left out of the S&P, and we're seeing massive potential buybacks by Goldman Sachs. And let's see if I can find the table here. Yeah, here it is. This table right here are some of the biggest buybacks here. This is in, I think it's in billions of dollars, or million. I guess maybe, what is that? That'd be thousands. That'd be millions. That'd be, billions with the second comma. And it's missing a zero. So this is, Apple announcing the $110 billion of buyback, and AIG, $10 billion, and MPC, $5 billion, $3 billion, $3 billion, $3 billion, and $2 billion, and $1 billion, and $1 billion, and $1 billion, and 700 million, 500 million, 500 million, 500 million, 300 million, 300 million, 250 million, 250, 150, 150, 150, 140, 100, 100, 100. So that's a lot of billions of dollars of buybacks that have been announced right there. A lot of millions and a lot of billions. These millions quickly add up to more billions. So is this going to be enough to take us higher? I don't know. We definitely hit the resistance yesterday and getting a negative reaction overnight. So this is cause for concern. I mean, I'm not going to sugarcoat it at all. This is cause for concern. So as we jump into everything here in a minute, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. I may never get it right again. I might not. That's, cold hard fact. I may wake up one day and not ever be able to have this vision of how the market works. I don't think that's going to happen, but it could happen. This presentation here is intended to be informational, educational, fun, and entertaining. It is not a recommendation to be buying or selling anything. All right, but maybe you ought to protect yourself right now, because the downside definitely looks like it might get going. All right, I'm just saying. But this right here is not a recommendation to buy stocks, not a recommendation to buy options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. If you desire personal financial advice, you got to hire and consult a financial advisor. And make sure it's somebody you trust. I mean, if you don't trust them, what the heck are you even doing business with somebody? So this week, here we are on Wednesday. It's benign. Like, there's just not a lot going on. Tomorrow we have a bunch of GBP, Great British Pound stuff. And this is from Forex Factory, so it is currency related. But there's, for us in the U.S., assuming you're in the U.S., and U.S. markets, which is what I'm primarily concerned with, unemployment claims is about it for the whole week. Like, there's not really, I mean, we have some preliminary consumer sentiment, but we get that about every week. And that's about it for the week, for this week. Now, thank goodness, Friday is my last day I'm committed to jury duty too. So we got 2 more days of potential jury duty, and then we'll be free. So anyway, I didn't have to go in today, obviously. Tomorrow, next week, we do have an interesting week though. We have PPI coming up before CPI. Yeah, that's US PPI coming in before the CPI. CPI coming in. Usually we get CPI then PPI, but I guess next week we're going to reverse it. Then we get Empire State Manufacturing, which has been really weak. And we get some retail sales. So next week is going to be kind of a week of some economic potential moving numbers here. And then Thursday, relatively benign day, not a lot going on. Normal unemployment claims. We get some Philly Fed and manufacturing. We get some, that's funny, different manufacturing indexes. We get Empire State, and then we get Philly Fed. And we get unemployment claims as usual every week. And then Friday, this one's an interesting one right here. Usually they release that, a lot of times they'll release that after the market closes right there, that currency report. How is the M2 money supply going? Now, the global M2 money supply has actually dipped below where we were when all the central banks kind of started really pushing liquidity. But the United States has not. So we're seeing some other places in the world kind of pull the money supply back. Now, as I've said many times, global liquidity is almost 98% correlated to how the stock market performs. And I don't have a good way to keep track of global liquidity. I'm working on some stuff in the background on how to track that more closely, but I just don't have a great way to do it. You kind of have to add up the liquidity of the U.S., the ECB, China, Japan, Russia. I mean, you have to kind of do an estimate on everybody to kind of get the global liquidity. And then if that's declining, then the U.S. market's probably going to decline. If it's growing, then the U.S. market's probably going to grow. And it's like 98% correlated over years and years and years and years. So it's kind of funny that way. Global liquidity is basically the only thing that's kind of correlated to the stock market. But on the short term and in the narrow view, price action is what really controls. So that's why billions of dollars of buybacks, is it enough? I don't know. Or is the price action going to control? Which is, I didn't even get the list. How many people have noticed this new thing that TradingView did with the watch list? It's interesting. Anyway, we've got the S&P right here. Yesterday closing with a little doji, which looked like not great rejection of trying to break out yesterday. And then overnight, we're getting a follow through down, pullback. That's really not what I want to see as far as bullishness goes. This is like exactly what I thought we might do. Look at that. We rejected breaking out of that box, we might go test the bottom of the box. If we don't hold that, if we get back out of the bottom of this box, well, we got one place to look for support below us, and that is the daily roadmap line right over here. You may be like, well, JT, I don't have that daily roadmap line on my chart. It's easy. Link down here under the description, $5, you can get it. Or I have a video pre-recorded if you want to go do the free thing and not pay or whatever. I mean, $5 is less than going to Starbucks. But if you just are adverse to spending $5, then go watch the video. Go hunt for it. It's like wasn't this past December, but I think a year ago, December. And I give you the code for it. Now you'll have to put it in yourself. I don't give you an easy button. For the $5, you get an easy button. You just click and boom, it's on your chart. And we may be headed back down there. That's right around 4,900. We haven't been down there in a few months, few days, a couple trading sessions, like since November. That's where we last hit it. And really, this last hit was actually a bigger time frame because it hit the 3-day. Right back here. Zoom it back up. Right there, see, we tagged in October. We tagged that 3-day. And we're way far away from the 3-day right now. And we tagged it right here in March. We tagged it in October. And then we're way the heck up here. It's all the way down here at 4,500. Could we see a pullback to 4,500? Well, you betcha we could. Look at this. If we break down, remember what the daily looked like? Let's zoom back up. Daily has that little arrow. If we break down below it, we'll probably come down here, bounce up, and then go on a deeper flush. Look at these levels. Where do those levels come from? Look, 3-day. We'll probably hit the 3-day roadmap line right there, 4,500. Now, if we get below that, that's where things get sketchy, and we might actually go retest the low down here. So this is definitely something to be aware of in the market. Now, the other thing we have working for us, though, for positive, it's a whole set of positives and negatives in the market. Like the price action supports that we could go down further. The price action, if we invalidate that, supports we're going higher. The fear and greed index is sitting here at fear. I would feel much better about a bounce higher continuing if we were at extreme fear. We can hover in fear for a long time, like we hovered in greed for a long time on the way up to where we are or where we've been. Most of this rally off the October low here, we sat in just the greed zone. We didn't hardly ever poke it up to extreme greed. We just kept grinding greed, grinding, and made one of the top 10 most bullish runs in the last almost 100 years. And that's pretty wild, if you ask me. Now, right here, may get a deeper, bigger correction. And that can, I'm just trying to give you a feel for what kind of setup we have going here. We have rolled over, coming back down. Going to test that 30-minute roadmap line. There's the market open right there. Get the prices down 21 on the S&P. If we reject back below this zone, in fact, for the S&P, if we gap fill and get below that, don't hold that right there. Likely we're flushing it on down. All right. Now with the gap down, we may see some retrace, backfill it a bit before we drop on out. I'm just super duper cautious right now on this whole thing. Looking at the oscillators, we came back up to the middle. We didn't poke out the bottom. Poking out the bottom would be kind of expected. All right, we rallied up here. From back here all the way in January, I've said we're probably going to go revisit the bottom. Even here in February, we didn't revisit the bottom. Here in April, we haven't revisited the bottom. We've rallied up. So far, 3-wave type move. This can result in a flush down here. All right. The S5TW has rallied back. This one, we could push it back to the top. We don't have to. You can see over here, we're up in the zone where a lot of times we get these relief rallies on a push down, and then we go make a lower low. We are in that zone on the stocks above the 20-day. All right, there's just stocks, S&P 500 stocks, the number of stocks, percentage of stocks above their 20-day moving average. All right, so you take the S&P 500 stocks, and this is like an index. You can't trade this. So this is a fast market oscillator. We tend to go from the top to the bottom, and it's the number of S&P 500 stocks trading above or below their 20-day moving average. This is above the 20-day is the percentage. So when you're down here, 80% of the stocks are below their 20-day is what that tells you. When you're up here, that's 80% are above their 20-day. Gives you a real good gauge on what's been happening. Now, the way I use it with these two big red lines that I've put on here, when we're up here, we're likely to get a retrace and go down here. When we're down here, we're likely to get a retrace and go up here. It's kind of like my gauge, right? Which direction should I be looking for opportunities? We're up here, watch out for going down. When we're down here, watch out for a rip higher. And that's kind of what we've had the last few days. And we may go do more bearish stuff. That's kind of what, it doesn't have to be fast. It can take a couple weeks. It could take us into June, well in June. And it could take us even further than that. You can see over here, we dipped in August, popped back up in September, dipped back down in October, back up mid-October, and down here for the end of October before we actually went ripping off. And this has been the rally right here. It was up here for a while, then we went down, then we came back up, and then we came all the way down. Now, S5FI, a little bit slower. These are stocks above the 50-day. The last time we were down here was October. And then we popped up and kind of did a little dip, right back up, lower high, and we rolled, but we didn't make it all the way down to the bottom. This one tends to go revisit the bottom, go revisit the top, and it doesn't have a lot of sudden fast movements in between. All right, we'll take our time and consolidate, and then dip down, take our time, get up to the top, take our time, get down to the bottom, double tap the bottom, take our time, right up to the top, a little dip, another top again. Now we're probably going to, this indicates, based on history of this thing kind of oscillating, that we're probably going to go visit the bottom again. And then even bigger time frame, stocks above the 200-day. This one moves very, very slowly. And we've been up here. We hadn't been up here at all. We hadn't hit the 80 line from the bottom all the way back in September of 22. All right, so the ultimate market bottom that we've recently had, in the 2 years ago almost, that was the last time. Before that, we hadn't even been up here since August. And when the market actually topped, we were down below this 80 line significantly. So this one actually topped out back in April before the market topped out in January of 22. And then this thing rolled right on down, making the ultimate low here in September. And then the market started rallying, but we didn't pop up to the 80. We've just kind of been hovering in between, finally got up there, but we didn't get anywhere nearly as high as we were back in 21. So, is this one indicating that we could possibly go higher? Absolutely. We could go push the extremes. This may be a temporary correction until we can push the extremes. So, this, it's like, what's the complete picture? Well, there's never these are all pieces of the puzzle to try to figure out where we're going next. All right. So what's actually moving today? What can we actually take advantage of? Well, that's why we dive down and look at the overnight action. Jump in here, and we rejected breaking out yesterday. That was pretty solid. Pretty solid rejection. So I'm definitely watching. If we get below the bottom of this box, that's indicative of something more sinister developing in the market and can take us right back down to this 4,900 area on the daily. What was the little arrow on the daily chart here? Right there. This zone. Now, if we get below that, on down. I've repeated this twice now. It's that important right now. The downside is potentially getting ready. Like this is the point where I get really nervous about further downside. We rejected breaking out so far. It's the initial sign right now, right here, the initial sign. Now, don't go dumping everything and getting short and coming back at me saying, well, JT, you said we were going to burn it down, and then 3 days later we popped up here. Like, that's entirely possible too. But this is your warning sign right here. If we break below the bottom of this box at 5150 now on ES, not on S&P, on ES, we're probably going to go it's a higher probability to go visit here than it is to get back up here and go up here. It's like 65% when we break here. It starts being 85, 90% when we get below this low. And it's almost a guarantee, all but a guarantee, when we get below this low right back here, that we're going to go touch that roadmap line and make a low lower than this, which, it's basically a guarantee that we're lower than this when we're lower than that. So that's where we are. What do we need? We need a daily close above this high yesterday to signal that we're doing this. That's the long and the short of it right now in the market. So the S&P, right now we're watching that level right down here, probably around 5110. We start getting below 5110. Odds are we're going down here. It's like 65% likely. All right. Anybody confused on this fact? That's been pretty clear. So we've got these buybacks. They could push us higher. But as far as what this looks like, and if you've never seen ES1 before, this is just the S&P 500 futures. I use them because it gives me the overnight action, whereas the S&P 500 cash index just gives me a gap. Again, there's no extended hours to turn on or anything like that. So ES is how you can tell and see what the overnight action was right there. NQ, which is the NASDAQ futures, also showing the initial signs of some weakness here, coming down to the 30-minute roadmap line. And if we start poking below that, well, we have the hourly below us. And then if we get below that, odds are we're going down to the daily, because we've already kind of messed with the 4-hour and shown that seems to have little to no support resistance here. Now we could go retest it and bounce higher, but it just doesn't look very likely. So you got to watch the time frames with the roadmap line. All right. Russell, on the other hand, this one kind of indicating that we may, like, that was the bounce. We held the resistance very tightly at the 618. This one has me very, very cautious for at least an echo of that first move down, if not something much deeper. So this move down right here, this is small caps. That echo would put us right here. And if we start extending it, we can get much deeper, much more quickly than ES and NQ. This is Russell, small caps, and a way to play it, IWM right here. We start breaking down, it's likely we're going to get an outsized extension, and possibly that outsized extension takes us down to 150, possibly even 130 area, all the way down in this zone over the coming months. And this could last well into next year even. Very concerned about this right now, and added some positions to possibly take advantage of that if it develops. And it could go quick. Like, we have the same kind of, let's talk about something really quickly here before I move on. This is an important point. Moving back to COVID. Russell topped right here back in 2018. See that, right? Topped here. We did this initial move down pretty violently. It took a while. That was from August through December. Now we came back up and did this choppy junk right here. Not nearly as big as what we're currently seeing, but we did this sideways move. Then we did this pop right here. And then here's the key point. We made this lower high right here. Focus on this right here. I'll zoom it up. Kind of came down near the daily roadmap line, popped up, made a lower high, and then we went on a rip. You can say, well, that was just coincidence that happened during COVID. It was already set up on the chart before the reaction during COVID. It was already in the chart. All right. This is what freaks a lot of people out. I was already prepared for this because it was already in the chart. How did I make $1 million during COVID? Because it was already in the chart. Now, we have a bigger time frame. Same sort of setup right here. Not quite exactly the same. We did this drop off of that high. This high happened back here in November of 21. Retraced. We did this sideways junk here. Right? Very similar. Not exactly the same. Similar pattern. We did this rally right here. Made the high higher than all that consolidation. And then just recently, we bounced off the roadmap line on the daily. We made the lower high right here. Lower high. What can that result in? A big outside flush. Look how similar. All right. Why am I warning you about it? Because if we get below that daily roadmap line, that's the opportunity to make fast money potentially. These opportunities don't come around all that often, all right? Where we set up the exact same pattern in a very similar way. Caution. Everybody with me? Anybody got any questions? You let me know. Oil continuing to push on down. Probably going to test this zone right down in here. Proving that we're going to push it on down. 76, 70, 75, 76, probably the level we're coming into. We're going to go retest this. Softening it up. Now, if we reject and turn green, that's probably it for the bounce, and we're going to go higher. So this is a key over the next few days. Are we going to pop it on down here, or do we reverse it here and go higher? GC popped above the downtrend, very weak downtrend of highs, retesting kind of from the top. If this breaks back above this high from yesterday and the day before, if we break above that, those kind of highs right there, we're going on up. And it's highly likely we're going to go right on cruising right on through the 618 and right up here. Now, if we break back below this trend line, odds are we're going to retrace deeper on gold. It's as simple as it is right now. Bitcoin. That looks like it wants to go hit the daily roadmap line. And the spot market got really darn close, depending on which one you look at. We came really darn close, but close may not have been it. It wasn't enough to kick off my indicator, so we may push on lower and go actually touch the roadmap line on Bitcoin. And we may continue the post-halving consolidation. And for those of you that have been asking me, well, I thought halving was bullish. You've been listening to mainstream media, not JT. I have for almost a year, have said that we would probably experience a pullback around halving. Probably after halving, in fact. And we'd probably go through a period of consolidation before we actually break higher. Usually takes 220 days after halving, about 6 months, before we actually start rocketing higher. All right? That can be out here to November, December timeframe before we actually start getting going. We could be farting around here well into the summer before we get really going something bullish on Bitcoin. All right? Could just kind of chop around for a while. And Ethereum looks more bearish. We have the potential spot ETFs for Ethereum kicking off on the 23rd. If the SEC classifies this as a security right in front of that, we're going to get a knee-jerk reaction that can go pretty deep. I have mostly closed most of my exposure to Ethereum. I have just a little bit left on, but mostly stepped away from that one. Dollar. Save the pattern here. Getting a green bar yesterday, pushing green today. We break back above these highs right here. Odds are 108.50 is the area we're going toward. 108 to 181, between 108 and 109. 108.50 right in the middle. So what's actually moving today, or what was moving today? We had an ANET pushing above that 618, sets the odds, 328 on the upside. CRUS, Cirrus Logic, nice. That probably hit the targets already. Yep, yesterday was your potential entry right there, and boom, right up in the targets. Went fast. LPX, that one also kind of looking for a breakout to 88 area. Reddit does not have enough candles to do anything. Does not have enough candles to really, IPOs are bearish. So this initial pop, this retrace, we may see a third wave move. We could very easily see a continuation lower. Could end up down here around 25, 27, 20, 30 area down here on Reddit. Ring Central, that's just the choppy sideways, just popping back up to the roadmap line. Bud, Anheuser-Busch, beautiful pop, holy guacamole. Holy guacamole. If we can hold that breakout, next upside 67, and if we hold that one, maybe, just maybe, we can finally get to my target up here at 89. Been holding this for a while. Would love to see that rally right up to 89. I don't care what the news is. You can say it's been, this is where we were back here. Actually, the Bud Light stuff kind of started happening here. We popped up, we rejected, we came down, did a 618 bounce, we popped up, we've retraced, nested 618 setup. This has the potential to rocket this one higher up here to 89. I've just been sitting on it, just been sitting on my position, waiting. RYAAY. Yeah, if it was so destructive for Anheuser-Busch, why isn't it at all-time lows? Like, we're not even close to all-time lows. All-time lows were back here in 22. Well, really, COVID kind of was back here. So we went down almost to all-time lows. And this is a log scale, so it's the prices get bigger as we go higher. And we've got a constructive higher lows right here. This is an uptrend all the way off COVID. Excuse me that I misspoke. That was the lowest low. Higher low, higher low, higher low again. That's constructive for going higher. Doesn't matter what your political bias against them is. That's a setup for going higher. All right. RYAAY, Rainier. Get a roadmap bounce. If we can get back above the 618, where these two highs topped right in here, let's just zoom her up. Get back above these highs right there. Daily close up there. Odds are heading on up to 155, 157. Be conservative on your target. Right? These are zones. They're not definitive to the penny, hundredth of a dollar prices. All right. These are zones. Be conservative on your zone. 155 would be a reasonable target. If we get a daily close up here, grab that piece. That's a high probability setup. How high probability? Well, we got to add. My indicator got turned off here. Let's add this back. Look right here. 75% likely. If we get the close up here, we can go right up here. Bros. Dutch Bros. Has a potential market roadmap bounce. The entry, a daily close above 32, sets us up for 39. Not too shabby. KB. Didn't quite touch, but got darn close. Got darn close. That would be the potential setup right there to take us up to 65. KD. Another one right there. That one right there. That one right there. And we've already hit the target. So you're going to have to wait for another pullback. INSP. That was a three-wave potential move up right there into that high. So where's support? Draw off that low, draw to that high. We're in the support now. If we start getting below this zone right here, watch out for that right there. The 100, 110 area. MSTR. Well, I kind of expect this one to come on back to the roadmap line. Maybe this is the way Bitcoin's going to go. Maybe this is the store. Maybe this one's the one that has to retrace before Bitcoin can go. Definitely be careful. And the question during 30 Minutes of Awesome last night was, if Bitcoin goes to 100, won't MSTR be the biggest company in the world? And no, unfortunately, not even close. Because we look, and they're at $21 billion in market cap right now. And there are 214,000 Bitcoins. Even at 100,000 is only worth $22 billion. If it was, even if we went to like 300,000, that'd only be $60 billion. So we're only talking, and that's if they had zero cost that would be added to this price. This has already got the current price of Bitcoin cooked into it. So really, we're only looking at adding If we're going to 100,000, only adding like half of that value to it, so only like 10 more billion. So $30 billion. And then if we go look at Infinity market cap over here, $30 billion doesn't get us even on the top 100. So that doesn't get us anywhere close to being the largest company in the land. All right. Microsoft up here, $3 trillion. Nvidia coming up fast with $2.2 trillion. If we get to about $1,250 on Nvidia per share, that's going to put us up near the $3 trillion mark right up here with Microsoft. Then it's just splitting hairs who gets the largest. Now, Nvidia has risen on this list so fast. History tells us that fast movers on this list tend to be like Icarus, and their wings tend to get melted by the sun and may not have the staying power. So caution is advised if Nvidia comes up to be the largest company in the land. Just throwing that out there ahead of time. Be very, very careful on thinking that. All right. Went down a rabbit hole there for a minute. SMCI showing some weakness. Definitely showing some weakness. If we roll here, support all the way down here. Support of the roadmap line and the support down here. Shopify getting below the roadmap line. Did not fire the entry. That's not bullish at this point. Making a lower low. Pulls it all down. This could go on a deeper retrace here. This very well could take a deeper run. That was one heck of a rally off this low. Right there. We could be looking at a move back down into this zone on Shopify. DV. Whew. If that didn't make a lower low now, I mean, that was choppy, overlapping. See, let me make a point really quickly here. You see this high right here, this initial move up, right? Everybody's clear on this, right? This move up right here. See that high? This one right here, right there. See that high, right? Now, if this was bullish, this low right here would not be lower than that high. Now, there's some caveats and whatever that could potentially have that. But what you have in between there, this move, let's clear this off one more time. This move right here, inside, we have that same situation where this initial move up and this low also overlapped. So this was already a corrective type move right here. And then we did it again in the bigger pattern right here. That's indicative that we're going to make a lower low when this breaks. And right now, we're here, and it's not going to take much to get a lower low on double verify. Now, where would the target be? That low, that high. The target is going to be down here at this zone around 13-14. And if we get below that, we could go down in the $9-10 area. Did I trade for that? No. I'm just pointing out. That's why I get very cautious when I see this kind of overlappy, choppy action. Even though it looks like it could be bullish, it had a nested kind of corrective. And all through here, these lows were overlapping these highs all the way up through here. This kind of indicative of a corrective type move, and the continuation would be lower. And we had the IPO, which we're potentially going to go even lower than what we already established as the low. So this was not an impulsively bullish move off of that low right there, indicating that we were going to eventually probably go lower. That's what it looks like we're doing right now. Nvidia, boy, this thing had a wild candle yesterday. Wild candle. And kind of cleaned it up a little bit today. We've got this move we did yesterday, and there is potential, although it's not great potential, but potential for this thing to rally right up to this 1052 area and potentially that 1250 area I was mentioning earlier. But if this is three wave and this ends up lower high than back here, this is kind of the line in the sand, if you will. As long as we are below that, the odds to retrace to the daily roadmap line are higher than the odds to go higher for right now. Trip Advisor probably coming back to the daily roadmap line, which is also the trend line breakout. And this downtrend of highs kind of cooking, not many. That was only 2. Jumped above it. Come back, retest it would be a normal price pattern. Retest the roadmap line, then we can go higher. ALAB, Aster Labs doesn't have enough not enough candles to do any kind of roadmap line or any kind of trend analysis for me. WCC, when they don't have enough candles, I'm not really interested in messing with it. WCC is chopping sideways and doesn't look awesome. Doesn't look like huge opportunity to make money, so moving on. Tesla freaked me out a little bit yesterday. Kind of liquidated some of my position, almost all my leveraged long position, TSLL. And I'm going to wait for whatever's happening in the market to kind of flow its course here. Tesla could come on down to 159 and find support before it turns higher again. But if it doesn't hold that, we could push on down to 125. This may not, this may not be done. Typically, the post-earnings reaction lasts for 13 trading days, which we kind of were at today or tomorrow. And arguably that was kind of it when we tagged the roadmap line and we started pulling back. So I'm just going to give this a breather for a minute. And I still have like 5 shares of Tesla that I'm holding from 180, which I'm slightly underwater today. And we could go lower at 160 area. It supports in multiple ways. That first move down echoed off of that retrace there. First move down, just delete that. Echoed right off of there. Takes us down here to 160, and the extension will be 166, and the extension will be 160. Caution there. TMCI, whew, that's a lower low. Medical specialty stuff, FDA involved. I just stay away from that crap, pretty much. That's just kind of the rule for me. Stay out of biotech, stay out of FDA, medical tech, med tech. $3 was the $4 is the target. $2 kind of is the extension down here. AMRK, AMRK Precious Metals, just chopping sideways, has been for a while, and there's no indication we're going to do anything else right now. Got to either break out or break down, otherwise just stay in. An object at rest stays in rest. So that's kind of like a defining principle on sideways consolidation, is just like, while we're doing this, we're just going to keep doing this until something upsets, either to the downside or the upside. This did a split back here, and a lot of times after things do splits, they go on a rest and don't do spectacular price action. That's kind of, we see that over and over. Uber has retraced to the roadmap line. Fully hitting the day. All the way in there. Maybe like, well, it was on earnings. Well, why were we dropping all this time before if this move was on earnings? What was all this if that was earnings? Now, if we break back above the 75 area, 87 is the upside target. Could we go lower from here? Yeah, don't buy it today. That's why I got to wait for the 618. Statistics on that one, 100% for 3 times it's done it before. Usually lasts 10 bars. So 10 days is usually what it takes to go from here up to the target. If I was going to trade for it on options, I'd buy at least 30 days. That's 30 trading days, not 30 calendar days. EA bouncing off the bottom of the roadmap line. That is not immediately bullish. May result in a move on down to 120 area, 121, 123. Twilio also reporting earnings. Not impressing anybody, I guess. Reported, this is how they cook the books. Look, they reported 80 cents profit. But when they standardized it with standardized accounting practices, lost 30 cents on $1 billion. I mean, come on. Don't cook the books. Just report the real number. Anyway, I digress. That's just been kind of a consolidation-y sideways. That was a little diversion out, held the highs, and right back down into the tight consolidation here. So nothing spectacular on Twilio for now. Not looking bullish, not looking bearish. There's no huge opportunity here for now. Coin. Come on, get back to the roadmap line. That would be my most ideal entry right down in here. If we can do it. One nice flush. I mean, come on, it's only like $40. Come on. One nice flush. Give me an opportunity right there. That's what I would expect. Otherwise, I'm going to have to wait for a move up through this prior rejection zone to get bullish on a move up to 530, possibly 670 on coin. We're eventually probably going up there, especially if Bitcoin and crypto gets pretty hot and spicy. But, this would make it look really good. DLR, more choppy sideways, rejection of that 618 level. Not good. Not very good. So that, just like I keep showing, that move down, projected off of that, we could be going to a lower low than we've had so far in the last month or so. QCOM, right up to the prior high. Can we get through and go higher, or are we going to retrace back down? That is the question right now. It may grind it till we can grind up through it. That was the prior all-time high right here, this zone. So be very, very cautious. It does not have to pop that right now. It may retrace before it can actually get the energy to do that. CRWD. Looks like we need a little bit more downside. Sony. Looks like we need a little. Oh, wait. It's there. It's there. We could use just a little bit more, but we're there. We made the move down. Now, if we get below this target right here, we can go on extension. It could take us down to 50. So this is definitely a key point where we want to hold resistance on Sony. And this has actually got this is a measured bounce. So let's kind of clean this up a second and talk about this. Turn off that so we don't get distracted. All right, what we've done, this low and that high, we're in the zone to do this measured bounce thing. All right. I would like to see it come just a smidge lower. And I had that target zone drawn in there because that's what I'm looking for. I'm looking for just a smidge lower. Now, if we do that, if we do that, this low, this high, let's just say we get down to that level, right? That sets us up for a potential to come up to 166. Potential would be here to go up here. Now, we may only make it to 120, which would be a bearish case and a lower high than this high right back here. But if we break above this high, we're likely to get on up here before we do another retrace and another push higher. So this has the setup to do that right now. This is, unlike other things that were very bearish, this one actually has somewhat more bullish constructive price action. But we need to hold here and get the continuation. Now, if this is in fact bearish, that's why we may stop at this level right here instead of making it all the way up here. So that prior high is kind of the tell right there. this level right there. If we don't clear that level, even if we did slightly, that can result in a bigger retrace. Now, what kind of bigger retrace? It's same way. That echo right there, that retrace off that level could take us down right there to the 53. That'd be a ouch. 50% haircut. Alrighty. Dun, 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 dun. ZI. Right down. Lower low. What kind of target? That place. Looking for $10, $11 right there. $9 below that. Upstart. Just choppy garbage. Nothing. Nothing to do here. Nothing to see here. Below the roadmap line. If we break below, we're probably going down $7. Carvana. Up at targets. Watch out for a retrace. Probably going to come visit the roadmap line at some point in time on the daily. It's been since December since we've been down there. Kind of due. Max, what is it? Media Alpha. Yeah, it looks like it wants to retrace. Haven't been down there since November. MAT. Hadn't been down there since October. Probably going to retrace at some point. Airbnb. Probably going to retrace. Lots of rejection there at that zone. Probably going to come on down. Would not surprise me. VST. And that one just keeps ripping higher. At some point, that's going to retrace. It's been, gosh, since May of 23, a year ago. And it's probably the craziest move this stock's ever made right here. Yep. Getting close to that 1.272, or that 2.272. 121 above that. Could we go up to 300? Absolutely. Could we go up to 525? Absolutely. Could we go up to something ridiculous like 5,000? Yeah, it's in the cards. It's like a 0.1% likely, but it could happen. Likely to stop at one of these levels here, though, way before we get there. And do a retrace, at least back to the roadmap line, if not something deeper. This has been a pretty crazy move so far. I'd watch for it to meet some resistance and get a retrace. That retrace could go all the way back down to the 20s at this point. Be very cautious on VST. SOXX did not get above the 618 level right there at 222, 223. Got to get above that to go to 550 or 252. If we don't, support down here, and we could retrace deeper. Dash down to the roadmap line, looking for that bounce back above 131 to go to 153. LABU is a leveraged biotech ETF, and it just, this is like so many things that I just think are dangerous, and we're rejecting the roadmap line. Watch for this flush. Watch for the flush. It may not go as deep as that big candle. It may just go down to this zone around 40, 35, 40. DIN. Well, that keeps pushing lower. Dumpster fire. 39, 37 below that. SMH. Looks like that's going to go with NVIDIA. However NVIDIA breaks. If NVIDIA breaks higher, this one's going higher. If NVIDIA breaks down, come back down to the roadmap line. PDD. There's no indication. One's more advanced than the other. PDD has the setup to go get 157 right there. Has it? That's the entry right now. Like, they go get it. Actually 150. Let's be conservative. 155. CS pushing lower, may go test this box where we consolidated back here in the summer of last year into the fall. ENPH also consolidating under the roadmap line, and a stock at rest under the roadmap line is going to probably continue to be at rest. That's just kind of like the physics applied to the market. Object at rest tends to stay at rest until something happens. So we don't have anything to upset this and convince me the pattern is doing anything different than consolidating and possibly going lower. That's your list for the day right there. Dun, 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 dun. Hope you have a great day, everybody. I'll maybe be back tomorrow. I won't know till later this afternoon if I can do Morning Monster tomorrow or not. But thanks for coming. I'll see you tomorrow if I possibly can. I'll be in Discord the rest of the day. And bye for now.